everyone. Today's Sunday, July 16th, and Michael and I, we do a market review every Sunday to talk about maybe some economic events and major maybe plays that might be the biggest movers as well as earnings. And we cover a couple of the mega caps and maybe some swing trade ideas. So yeah, welcome everyone, and Michael's gonna start it off.
Okay. I like to go over the S&P 500, and if it's a hack if you chart this prior to class every week and then confirm what you see with me. Okay, because I review the SPY every week. Okay, so I'm going to do the monthly, and then we'll do the weekly and the daily, and then we'll do economic calendar, then we'll go to earnings. That's the agenda for today. Okay, the discussion is gonna be pretty intense and pretty deep here. Okay, so let's look at the monthly chart. Let's draw in what we know so far. So this line, this top here is I thought it was, the high was 430 and the high here was 430. So we cracked the 430 line, right? So that's super important. So why is it super important? It's gonna take a major bad news for the market to go under 430. If the market goes under 430, then we can be shaking a little. We can be shaking. Okay. If the market goes under 414, then there's some sort of a economic recession happening probably. Okay. So it's just remember, we're just still climbing this beautiful uptrend. Remember, and if you look at the monthly chart, okay, just so you guys know, the market can climb a beautiful uptrend on a monthly basis for years. Just look at it. Just look at the chart. Look from here to here. It just keeps climbing and climbing and climbing, and then one red, okay, maybe two. It never does 3 months in a row. See, notice that? And then the pandemic happened, right? 3 months in a row. So what I'm trying to say is we're in a really deep extreme bull market. Most of the time by calls, okay? So this thing could be just the very beginning of a very, very long bull run, okay? So just keep that in mind. Okay, so let's put that in the resistance here, okay? Let's put them the next resistance levels. This area here is going to be trouble for the market. I think there's going to be a slight pullback, but a slight little rejection, but still possibly another green candle in August, another green candle in September, maybe, right? So, but just keep in mind this area of resistance here. It's coming. We're approaching it. So it starts at 450. So this area is going to be it's going to be headwinds for the market. Okay, so that it has to go through earnings, and it has to go through July 26th FOMC, and then it has to go through August Jackson Hole meeting. So those three are the big possible reasons why the market's going to have to consolidate here and pull back maybe. Okay, so I just want to put you aware. So what I'm trying to say is if you have big positions or are in profit in big moves, it might be good just to manage some risk and take off some off the table up here, right? And then if it pulls back, add back to your positions, right? And that's something that Esther's really good at. Okay, so she can talk about that strategy a little bit later. Okay, let's go to the weekly chart. Okay, so the monthly chart looks extremely strong. So the weekly, so I'll take out the lines. So why do I do 3 time frames, right? It's really good to get a confirmation from all 3. Okay, and then as I'm day trading, I know that okay, we're in a bullish market, right? Chances are I should be buying calls when I'm scalping, right? So we can get the context right. Okay, so it's good that we get all the time frames correct. Okay, so this is the area of resistance I'm talking about here on the monthly. So it starts here, okay, just to get it exact, because the price got rejected here. Perfect. 450 is the high. You can see it there, right? It says high 450. That's where it got rejected. So here the high is 451. So we peaked over it, but then we closed under it. Okay, so that tells us, okay, so let's say that again. We broke over it and we closed under it. That means there's some selling pressure up there, and it was enough that it kept it under the resistance. So the bears won the close. Okay, so the bears are defending, but are they going to be able to hold very long? Probably not, because bulls are fighting back. This candle is pretty strong, right? It's shooting up. Okay, so let's just draw in the resistance here. It gets rejected 3 times up here, 358 area. Okay, So that's really important. So if earnings this week proves to be strong by Netflix, Tesla, and I think some of the more of the banks like Morgan Stanley goes tomorrow, and then travel is like all the airlines are going, right? And make some okay. So we'll go through that. So if it does well this quarter, this week, I think we can be challenging this 457 and then maybe end up in this range. Okay. So I'm overall bullish on the charts, especially when we are still climbing this beautiful uptrend. Like we're still climbing through this channel, right? So it's just beautiful because we're sitting above all the moving average. We're climbing up towards this resistance, and we've broken out of the consolidation. Remember, we broke out of this ranging consolidation, right? So when it consolidates for since October until May, so that's what 6-7 months or whatever. Because it's consolidated for 6 months, the breakout is not just a fake breakout. It's a solid breakthrough. Like this is going for, I would say, all time highs by the end of the year. Whether it does that or not is going to be hard to know, 50% chance, right? But it is moving towards that. Okay. So bullish on the weekly chart, some resistance heading up into earnings right here. It's all going to be dependent on Netflix and Tesla. But I'll tell you now, for me, I'm bullish on both. Okay, and I'll share a lot why when I'm discussing with Esther. Okay, so I'll do a daily here, and then I'll pass it over to Esther to do her option analysis, where she gives us the range and what the institutions are thinking. Okay, so on the daily chart, I want to review. Okay, so on the daily chart, it's broken out of this ascending triangle pattern, which is really nice. Okay, through a gap up. Okay, so let's study the personality of this buy here on this up move. On this up move, it looks weak because we're heading into resistance, right? So the volume is sort of dying down into summer. Okay, so the volume is dying down into summer. It's something that we have to notice on the daily. Okay, it is not just not moving up; it's dying down. Okay, so yeah, there's not much buying pressure. Both are up here. Okay, and there's that resistance up here that we talked about. Up here, it goes up to 450, and then up here 457, and then 462. I just don't think it. So I think that maybe a couple more candles up, and then maybe come down, trade in this range a little bit, consolidate, and then go back up again. So when I can say consolidate here, I really mean the market's pulling back. There's profit taking. There's going to be profit taking, right? So the market pulls back on a red day, pulls back. But guess what? Bulls buy more of what they like. It gains more strength. It gains more strength. So what happens is it pulls back, gains more strength on the moving average. There's buyers here because that's the average of this is the average, right? Of where most people have the SPY or whatever. They buy more here and it rips some more. So that's what the SPY is going to be doing for the next 10 years, I would say, unless there's a pandemic or something weird happening. Okay, so the chart just looks good, and the price action, the candlestick analysis just looks good. There's just not a lot of selling pressure. You see that? Like we're talking about, this is a big killer here in the market. Big killer in the market, right? Big killer in the market. Big killer in the market. Here, the price is moving up higher. There's maybe some profit taking, but nobody's waking up and saying, no, this is the top of this run. Nobody's saying that. Okay, so the chart looks good. I'm bullish this week again. I'm bullish pretty much every week for the rest of the year. Okay, so that's the analysis. So on just to put it on record, I think we touched 3457 this week if the earnings are strong, and I think the earnings are strong. So I think that's the target. So if we break 452, 455, you'll see me say 457 all week. Okay. But if we break down, I don't think we're going to get any lower than 444. Maybe we've come back to fill this gap a little and into this range here, but I don't think we're going to get that low. I don't think we get under 446. I don't think we go under 448. Okay. So that's the range, but right. So now you guys know, and then Esther can chime in now.
Okay, so I have a similar range to like Michael here for 45. I can see where he's getting it, but I want to show you something because we're going into quarterly earnings, right? So understanding year over year, quarter over quarter is really, really important. So I'm going to tell you how I got this. Okay. So basically I had said in a bullish sentiment, as in rates will no longer go up anymore and stop increasing, right? So I said here, even the bearish scenario, like both scenarios, I had it were previous to quarter two. We're going right now is previous to quarter two. We're gonna grind into 445. Where are we? 445, right? 440, 445. This area right here by July. Like, where did it go? By May, June, July, we're gonna see 435, and then 445 into pre-quarter two, and then 470 by August, right? I wrote that out here too, the bear case scenario, but then we ended up in the same place. Isn't that ironic, right? And the 29-point rule, if you look at this trend line that it's following between these two channels, right? The downswing, swing low, swing high, swing low, swing high, right? This channel gap is 29 points. So per quarter, the SPY S&P 500, every 45 days, the max it moves is actually 29 points. The max it moves, if it's like back to back, quarter to quarter, 2 weeks, is 60 points. Okay, so now we have stats out of the way. But look at from 21, 420, where did it go? 421, this area, to here is 29 points, right? So I can actually see a pullback before we continue, because if you look at last year quarter two earnings, right? Last year quarter two earnings, we're down here. This purple line, actually, it's purple line here. Hold on, give me a second. We were here, this one, right? This white line, and then we rallied up. Where did it go? Here, this one. We rallied up into August, and then this caused a drop because they're like, we're gonna do 50 basis point hike maybe. Then they changed their mind and more Fed meetings, and then they said 75 basis point hike right here. So it made it plummet, but then they said, nope, we're doing 50 basis point hike. So it went to here, right? So that's basically what this move was all about. So we're right here from last year. That is here. But because of the sentiment of, okay, they're already saying that it's not going to go up anymore, the rates, it was starting to get priced up on anticipation of no rates hiking, right? So possibly we could be a little bit priced in, is what I'm saying. So in order for it to continue, we need more and more and more earnings that will beat guidance, right? We need it to beat guidance to surpass this area, because majority of the S&P 500, if you look, it's very priced in. Okay, so this is on quarter over quarter, like 6 month cycles, right? I'm on 6 months. So in 6 months, VIX went from 30 to 12. I actually said by quarter two, this time in July, when the market was here, right? When the VIX was here, I was like, watch until quarter two, which is the strongest earnings quarter. We're going to come back to VIX 12. And which was in 2020 was VIX 12, which is pretty much like VIX 13. Sorry. It was in 2018. Was it 2018? I know it was like somewhere like crazy. 2018? Yeah, 2018. This is out of rates. In 2018, when they raised interest rates here, right? And then all of 2019 was a bull run. All of this, the market went up nonstop, right? So if this hovers in this area, chop, 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 like this, we're going to see a 1 to 2 year bull run, right? So, I mean, what Michael's saying, buy the dips, go long-term long, it's a good opportunity to get perspective on what happened coming out of previous cycles of correction. But for the near term, I believe it's a little bit priced in. If you look at last quarter for Netflix and Tesla, they also reported around a similar time, right? They reported first, but look what happened. Like they first dipped, right? Like do you guys remember I had that like 430 target and then pulled back first, and then it hit this like crazy, like it gapped up to 460. So just be careful for this week for the first set of earnings. We're just testing the waters to see if it's priced in or not, because Apple, Microsoft have been hitting all-time high. And hold on, I'll show you Microsoft. Right? They were able to surpass all-time high and so was Nvidia. So Nvidia is actually 1 quarter ahead. What I mean by that is if each company moves a quarterly range, this moved like 1 quarter actually ahead of time because their guidance was so strong, right? So we don't know what the guidance of Apple and Microsoft is going to be. We assume it's going to be strong, but for this week, I'm actually being very, very, very careful, like thinking it's priced in because of this, right? We've already moved that 29 points, and for it to continue, we need more earnings to be released, which is going to be in the next 2 weeks when there's mega cap earnings at the end of this month into the first week of August. If you look at, hold on, give me 1 second. So here's overall the biggest orders, okay? 1 million, no filter yet. So I'm just gonna kind of like show you, like this is from the highest strikes. No, there's not that many calls at the higher strikes, right? There's no calls here except for this one, 3.9, right? Do you see this? The highest calls here is like 436. And then they have some really heavy puts, 10 million, 10 million. These are longer date expires because, you know, they don't like time decay there. But just keep in mind, you know, this means there's a lot of volatility. This is stock contingent probably, or, you know, they could be a hedge against this. But even institutions, they're doing wide strangles, right? Out of the money strangles to cover the delta. They're neutralizing strong negative delta with positive delta, right? Look right here. 1-to-1 almost, right? Does that make sense? Okay, so we're going to break down this week to see, okay, for short term. For short term, if you go for, okay, so tomorrow is what, the 17th? Okay, so let's look at overall this week, okay? I'm going to screenshot this. I'll put it in daily ranges and then put my thoughts on what I think it means. So what I'm doing is, okay, here's Monday. There's all, I do it by, I filter on the weekends only. I filter it by strike, the highest prices. And I'm like, okay, where's the cutoff? They're cutting it off here for Monday. No higher than 450. Look, 450, 451. Like, look at all these puts, right? Then I filter it by time, the latest time. So at the end of the day, though, they have a lot of calls. So, okay, there's still a lot of puts at 451, like pretty heavy, right? So we could think if we move up from 450 into the 451, that's 3 points, right? So you now have that like 3-point rule, like 448. You add 3 points. What is that? 451, maybe 452, and then we get rejected. So watch that area, 452 into tomorrow, 451 for Monday. Because there's a lot of puts on that area, right? Okay, so let's go to Tuesday. So Tuesday, okay, so look at the notional value. These are just Tuesday. Again, 451, right? They're not gonna let it go above that. Like there's like this is like $2 million, right? At 451. Okay, so here, after it goes down on Tuesday, what does that show? They have all calls. So after it goes down on Tuesday, they're going to reverse it on Wednesday. It's all calls, right? But they're from lower strikes. So obviously, they're going to push it down a little bit and then bring it back up with positive delta, right? Above 448 maybe. And these are like $1 million. So this is pretty heavy, holding the market up. We just don't know how much they're going to pull it down. It looks like very choppy though.
Monday
They have
looks
no orders on this day. Okay, let me see. Like what date? Okay, do we have an economic event on the 20th?
the 20th. We have.
There's no order flow here.
No, there's nothing going on except some economic data, but it shouldn't be big when it's not big. It's home sales.
Look at this. There's nothing.
And Friday, there's nothing scheduled on Friday, July 21st. But
Okay,
it's a trading day.
This is really interesting because this is Thursday, right? The 20th after Netflix earnings. So right now, I feel like they don't know until why Netflix is so important is Netflix affects Amazon, right? Amazon Netflix is Amazon's #1 customer. And then also Netflix is going to show, does ad revenue really, like, did it do well or not? Adding that as a new revenue stream, and then that will also affect Meta and Google, right? Because they're also based on ad revenue, and then also if like people have been online, so that's going to affect Apple, Microsoft, like everything. So they all one affect each other. So I think that's like a key. I'm going to have to update the Thursday. And then here is Friday. So Friday, I have to raise the value again. So here again, like puts, okay, so into Friday, like there's a lot of stringles. 46, 460, 450, 450, 450. Like, oh my God. But then they're pinning it to close at the end of the week around 448 to 450. Do you see this? Like, that's where they're gonna like kind of maybe even a little bit higher. So around 450 into the end of the week. So it's not extremely bearish. It's not extremely bullish. We could almost close flat to slightly higher. Does this make sense? So I'll post this into daily ranges, but just keep aware. It's good to know like what's possible for this week, and don't be overly bullish or overly bearish because the money's not showing into like strength into either direction. It's just showing a little bit bearish more on Tuesday, a little more bullish on Wednesday.
PI and PPI, right? And our community, for those who are new, and for old students who are, you can confirm, right? We were like, let's just go called into CPI because we're bullish. Everyone is targeting 450. 450 was the target last week, and it hit. Okay, so last week was just intense. So this week, it's just not that intense this week for economic data. Okay, so just not much going on here, not much to look forward to when we do our analysis. It's more earnings. Okay, so Monday, manufacturing survey. That is an important piece of data for the market because it's going to show how slow the economy is slowing down. It's going to show. It's going to impact, right? Manufacturing is really important. Okay, Tuesday, retail sales will give an indicator of consumer spending, right? So that is important. But it's not like CPI or PPI where the market is moving 1 or 2%. Okay, it's not like that. So this economic data is important. The market will trade off of it. So if they're all bullish or bearish or whatever, the market will trade. But remember, there's always European data. The market's always moving off European, like UK or EU inflation data numbers, right? So we gotta pay attention to that too. So Wednesday housing starts not that important, and then Thursday too, just not that much going on here, and then Friday not scheduled. So it's not a very big week for economic data. So it's actually relatively slow. Okay, so that's all I have to say about that because there's not much to say. Okay, so I want to go review this. I review this every week with you guys, so we know where the market is pricing in the Fed rate hike. Okay, so last week this number was at 93 and then 74. Like it was at 70, it was even at 95, right? Now it's at 96.1. So the market is basically confirming that we are going to hike rates one more time. So our current is at between this 525. We're going to be doing another 25 basis points in July. Okay, so I think I'm not going to say too early, but next week when we do FOMC analysis, right? I think that will be the first trigger of a major, a pretty big pullback. Okay, so we'll talk about that then. That'll be the trigger because the market's now going 25 more basis points higher of interest, right? So that's not gonna be good. Okay, so and then I will go
That's
to
not good.
yeah, that won't be good. So I'm telling you right now ahead of time, Esther. Like we were bullish on CPI and PPI, but the labor market, the unemployment is too low still. It's just people are still like they still have jobs and their earnings is their salary still going up and they're still spending, right? So there's a possibility inflation might go back up again, and that the Feds don't want that. If the price goes back up again, they're gonna flip, and when they flip, the market's gonna go deep red. Okay, so once they raise the interest rates, guess what? That's the last rate hike for the rest of the year. Okay, so if it's the last rate hike for the rest of the year, so once we
What month is that? What month is that?
Huh?
What month is that? The last rate hike?
This year, July 26th.
July. Okay, I have to write that down.
That's really important. Okay, so let me tell you how this is played out in my mind. Okay, so once we get that big red day, we make it a second red day on the SPY and then the Qs and Nasdaq or whatever. But guess what? The market realizes this is the last rate hike for 20 years, like for 10 years.
That's a really okay. So like,
That's
okay,
really bullish.
that explains the puts, right? That explains the puts on the SPY order flow for those millions of dollars, because they're conveniently making the rate hike before earnings. So they're gonna pull back the market before mega cap earnings, like Apple,
That's right.
Microsoft, all of
And
those, right?
all the
And then
institutions
you
jump
have
in.
to buy that dip.
That's right. We're in a big bull market, right? We're in a massive bull market, and I think this is gonna trigger the market down. Everybody buys in, and then they're gonna realize, like, look, we're not gonna be raising interest rates anymore because inflation has come down from like 9% to 3%, and then they've been cutting rates. So for all of next year, we're in this massive bull market.
Yeah,
So
they have to start pricing up, lowering rates.
That's right. That's right. That's why we're so like we don't understand why bears keep shorting the top.
Yeah,
Short
because the mega caps are growing at a faster rate than the interest rates are even going up. So that's why the market's going up, you know? Like, even though rates are going up, it doesn't matter. Like, if Nvidia is growing double per quarter, like, it doesn't make sense that a 5% rate hike will even affect Nvidia when you need Nvidia for everything.
That's right. I like that. I like that too. I like what Esther's saying. Yeah. They said it doesn't matter if the interest rate go to 10%. If Nvidia is growing 30%, it really doesn't matter to Nvidia, right? Okay, so that's the FOMC here. It's something that we have to monitor for next week. Next week, because this meeting is next week. Okay, so
yeah, 25th expected move, right? I expected move this week is pretty tight. It's only showing 560. This is one of the smallest weekly moves, right? So that means don't expect something like major, obviously, right? If it goes up 5 points, okay, we could aim into the 553, which I showed you in the options order flow anyways. And then if it goes down, you can maybe aim for 445 to 443, right? So 445, 444 was the area that Michael was saying, okay, I feel like this could be like a major support. And it supports that for this week's move. We can see kind of where majority of the money is betting towards. And here it's like, okay, 445, look, 17K open interest versus 30 at the 450, right? And then it starts going down. So this is a very heavy area, maybe to here, these two areas, right? Either the 452 or 450. And then if we see that any downside to the 455. So if you want to trade like a strangle, right, you can do it this way, or we can play it into this way. And you don't have to enter at the same time. As it's going down, like you buy this, right? And when we see 445 support, you can go up to 450 for Friday. So I'll post the plays. I post the plays every morning, but then I post the whole range in daily ranges. Okay, hope you guys, I think that's it. And I'm gonna go. Have a great day, and we'll see you tomorrow in trading. Bye.